Hello, welcome to Student Loan Repayment. Today's program is focusing on private loans. My name is Fred Amrine, and this program is being sponsored by Repay 411, a company that focuses on student loan consolidations, loan repayment, and loan forgiveness, trying to find the best way to repay your student loans. So let's begin. So unlike the student federal loans, the private loans are much different. You are limited to the number of repayment options you have, and it's basically time is going to generate which method you can use. The maximum time for most private loans is 25 years, yet you may select different time frames, which makes the payments a little more expensive. We also mentioned in a prior video about consolidating your private loans, which I would highly recommend since it will simplify the process for you and avoid the risk of default. The issue that most people have is there's only a limited amount of companies that currently do private student loan consolidations. You also have to, before you do your consolidation, you need to look at what benefits you currently have. Some of the older loans have some nice benefits that you may still want to consider, such as if you make about 36 or 3 years to 6 years of on-time payments, you'll get an interest rate deduction. Also, you may have a co-signer get released from your loans if you're on time with your payments. This is something that's really beneficial for the person that's co-signed for you. The downside is that with the private loans, there is no loan forgiveness formal program. Some employers do offer loan forgiveness, but it most likely would be taxable in this case if it was related to a private loan. So there's no formal process like there is for the federal programs available. As I said, the co-signer is at risk if you default, so it's really important for you as the owner of the loan or the initial borrow to consider proper insurances. So I would consider that you have life insurance or disability insurance. If you can't afford it, your co-signer may want to take that risk or pay for those coverages to make sure that they're covered in case you do default. The other advantage too is most of the private loans have variable rates. Once you do a consolidation, which again we highly recommend, it will create a fixed interest rate. We're at all-time record lows with interest rates. I would highly recommend you look into doing that. It also establishes a fixed payment, so it reduces your risk going out as time goes on. It's a much better planning option for the long term. You also need to consider the combination of both your federal loan repayment requirements and your private. Again, there's not as much flexibility within the private loans, so your flexibility will be on your federal loans. But the combination of that could be devastating to your overall financial budget. Working the combination and see what options are available to you is critical. So what do you need to do? First of all, you need to create a budget. What's your income? What are your other financial commitments that you need to have? And understand how does the repayment of your student loans best fit that? What's the combination of that? Also consider the co-signer's importance. It's really critical that they have been nice enough to co-sign for your loan so you could get educated. Now the financial risk is in both of your hands. So to get them financially off your repayment schedule would be a great benefit. You need to analyze both the short and long-term impact of your repayment decisions, seeing what flexibility, at least here with the private, I would highly recommend you look into having some fixed long-term payment by some consolidation method. Understanding how the combination works with both your federal loans and your private loans to show you what your total repayment process looks like over not just the short term, but again, your federal loans have some loan forgiveness. That may be a great option for you on the long term. And then confirm the incentive programs with the lenders. So as you go through this, we said earlier, you may have a payment to release the co-signer, or they may give some incentives to reduce your interest rate if you make on-time payments. A few years ago, some of the private loans offered that. That may be a reason of why not to consolidate a current existing loan. I hope you found this video helpful. Please visit the other videos on the website, and if you feel you need professional help, please visit the service area or give us a call. Thank you and have a great day.